What's going to happen in 2023? According to Redfin, home sales down, mortgage rates down, rents down, millennials renting forever. I'm going to talk about the whole thing coming up in this video, give you my color, my take on Redfin's prediction for the 2023 real estate market. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker licensed across the country. If you want to connect me and my team, go to greatmortgagebroker.com. I'm just a guy that's done a couple $100 million in mortgages in the last couple of years, been around a few hundred home buyers buying and refinancing over the last couple of years, giving you my take on the housing market, on mortgage related stuff, and do with it what you will, right? Redfin, huge data aggregator. I was trying to say data aggregator. Big words are tough for a public school kid like me, but bear with me. Go through it, kind of give you my take on it, because some stuff you may agree with, you might disagree with, but nonetheless, like, you have to pay attention when a big data aggregator like Redfin talks, because they do have a bunch of data, right? And they've got millions of searches and all these trends for what places people are searching and where they're migrating to, so on and so forth. So without further ado, I'm going to try to get through this. They had like 11 different predictions for 2023. Some of them I feel like are more important than others. So I'm going to spend more time on some, less time on others, but let's get into it, right? Some of these should not be a surprise to anybody who's been paying attention, right? Mortgage rates will take center stage in 2023. Agreed, right? Mortgage rates and what they do is going to affect demand. How much demand there is in the market is going to directly affect home prices. There's not much you can do that's going to affect inventory. You know, like, mortgage rates can have a huge effect on demand, for better or for worse. We saw that in 2022. Mortgage rates go up, demand falls off a cliff, especially when you get up above 6, up above 7% for a time. Demand really, really wanes and affordability becomes an issue. When rates were 3% and even below 3% on a 30-year, demand was on fire. That's why there was over 7 million homes sold in 2021. So mortgages, forecast for mortgage rates, home sales, and home sales price, account for a range of outcomes because they don't know what's going to happen with inflation, employment, other macroeconomics. So you'll see in this report, it's pretty cool. There's like an upside, there's a downside, there's a base case. And so they're not just saying, hey, home prices are going to fall by 4% or home prices are going to go up by 3%. They give you a best case, a worst case, and a base case, which I appreciate from them. So first prediction from Redfin: home sales will fall to their lowest level since 2011, with a slow recovery in the second half of the year. Pay attention to the words, right? Home sales. When people say home sales are going to be down 16%, like it says in this article, it's not saying that home prices are going to be down 16%. 16% fewer homes will sell in 23 than in 22. That lands them at 4.3 million homes being sold, which is 16% fewer than the 2022 number. Doesn't mean prices down by 16%, which a lot of people want, myself included as an investor, home prices to come down, but that's not what this stat is referring to. I agree wholeheartedly with this. With so many people in such great mortgages, there's real disincentive to move. So less people are moving. So there's less inventory, less action in the market because of that. High rates causing affordability issues now, low rates kind of locking people in. So home sales likely to fall to their lowest rate in 11 years. And they've got this upside. This is probably like, what would you call that? 4.7 million. Base case is somewhere in the mid fours. I guess maybe this is their 4.3. And then downside is under 4 million. My boy Mike Zuber thinks we're going to be under 4 million, which he may very well be right? And this will be the least amount of homes sold since 2011, which is pretty wild stat, but not surprising. This last quarter of 2022 really, really slow when you count number of transactions. So prediction number 2, mortgage rates will decline, ending the year below 6%. Remember, they're talking about 2023. They're talking about next year. And this report was December 6th, so it's going to be close to a month old. Well, I guess it's only the 19th was I'm recording this. It's only 2 weeks old, but nonetheless, like rates aren't above 7 as this shows, and they're not going to be above 7 ending 2022. So I think we're already 6.1-ish, right? So we're already way down in here. If we have rates decrease over 2023, like this shows in pretty much all cases, then maybe we're talking 5% 30-year fixed average by the end of 2023. I don't know. I'll let you decide. But this one is starting at a little bit high point, so we got to account for that. Okay. Home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures. This one is something that's welcome, but you've got to keep in mind we're not talking about 40, 50% home price depreciation like all the doom and gloomers, right? Like 4% is their base case, a decline in home prices by 4%. And before you get too excited and tell yourself you're going to wait, people are already writing offers, getting 5% discount, 10% discount, 15 and 20% discount from the height of things, right? Early 2022, rates were still low. Demand was still insanely high. People were paying a premium for homes. End of 2022, some of those same homes, especially depending on what market you're in, are selling at 15 to 20% lower than that peak price. So we've already seen these deals happen. To say that, like, the price growth is going to fall by 4% is not really anything major. And here's again the upside, the downside in the base case. Upside ends the year at a 3 or 4% home price appreciation. That's probably pretty optimistic, right? The base case, like they said up there, a 4% decline in home price appreciation. Then the downside, this is 11 or 12% home price depreciation. Again, there's no 40% on this chart, and it's going to vary by market. Somewhere in this report, as I was reading it, they're talking about the Boise, Idahos and the Austin, Texases, and the place that just saw humongous growth in 20 and 21, unnatural, unsustainable growth, 30, 40, 50% over that 24-month period. Of course, those markets can see a 25% downside, and it's really not even going to get them anywhere near 2019 or quote unquote pre-pandemic levels. So seeing home prices relatively flat, 0 to 5% depreciation is a lot of folks. That's where they're falling, right? And it's interesting to see that we probably 6 months ago and forward saw this steadily decrease from home prices will only increase by 6%. Nah, home prices are only going to increase by 4%. Home prices might only increase by 2%. Well, it might be flat. Well, it might go down by 2%. And I think that like this 0 to 5% is kind of where I've always been at. It's going to be relatively flat. It might come down a little with reduction of the number of homes actually selling and the inventory numbers being so low. The thought of 30% overall, price depreciation is just ludicrous, out of your friggin' mind. Might be 4 or 5 markets you can point to that might see 30% over, an 18-month period. They're cooling off from just ridiculous appreciation. But that's definitely not going to be the norm or the standard or the average. Nowhere friggin' close. Midwest, Northeast will hold up as best overall. So this shows you like what housing markets are going to hold up the best as the market cools off. And interesting to see Lake County, Illinois, Chicago, Illinois, Milwaukee, Wisconsin, these Midwest counties, markets, that are going to hold up the best in 2023. I wanted them to post something on who's going to hold up the worst, otherwise known as who's going to see the biggest home price depreciation. I'll just tell you there you go, on the other end of the spectrum. Well, they did say it. Austin, Boise, Phoenix, because they had such crazy growth. I mean, those three markets might have seen 50%, 60% between 2020 and 2021. That's crazy. A $400,000 house sells for $650 or $700. If that sees a 30% decrease and goes back down from $700 to $490, shouldn't be a surprise. And $400 to $700 and back to $490 is still higher than it was pre-pandemic for a lot of those markets. Okay, prediction number 5, rents will fall. And this is the one where they talk about these poor, Gen Zers and young millennials will continue to rent indefinitely. They're just going to rent until they can put together a down payment, have a stable, good paying job, and be ready to go purchase. So have hope, millennials, and know that we write loans every single day for millennials that are winning, getting into good paying jobs, buying homes well within their means with 30-year fixed rate mortgage. It's not a matter of what you qualify for. It's a matter of what you're comfortable with. So I've seen a lot of millennials not only buying homes, but making good decisions around it, right? Great paying jobs, $200,000 a year, getting into a mortgage that's $4,200, up against their, $18,000 a month salary. They're not going to be in trouble, especially when they've got really marketable job skills. And so, job security's pretty solid. All right. Builders will focus on multifamily rentals. This is kind of interesting because we know there's a lack of inventory. So more multifamily construction, hopefully more markets and states do things that promote construction, that promote more units, because that's what we really need is more affordable housing. It's hard to build affordable housing when laws and regulations make it expensive. Investor activity will bottom out in the spring, then rebound. This is an interesting stat, right? Like real estate investors are going to purchase fewer homes. I don't know if I think that's true. There's not humongous institutional investors buying up hundreds of millions of homes at a time because they can borrow money at next to nothing. But small investors, if there was some way to pool this between big institutional investors and big time investors and mom and pop, I bet you mom and pops are buying just as much or more in 23 than was purchased in 2022 because more negotiating power, easier to get in contract, easier to get credits to buy down the rate, get a discount on the price, and all kinds of stuff that is good for the mom and pop type of investor that we're working with. Again, if you're buying a 1 to 4 unit, that's our lane. We're nationwide. We're happy to help. Go to greatmortgagebroker.com, connect me and my team, and we're happy to help. If you want an agent somewhere in the U.S., just go to homeandmoney.com/Matt. Okay, on with the show. Gen Zers will seek jobs and apartments in relatively affordable mid-tier cities. Not surprising, right? Like I think remote work, although it is not what it was in 20 and 21, is still a thing. There's plenty of jobs, for Gen Zers and millennials, whether they're self-employed, running their own gig, whether they're working a job that can be remote. They're more flexible with where they're going to start their careers, and they're more flexible in some being able to work remotely. So they'll be able to say, listen, I'm going to live in this city that's not insanely expensive to live in. And there's plenty of those cities all over the country. This one's mentioned a few, like Tucson, Arizona, or Savannah, Georgia. Okay, migration from one part of the country to another will ease from the pandemic boom. Right, we saw a bunch of migration. Everyone's going to Boise, Idaho. Everyone's coming to Texas. Everyone's going to certain parts of Florida. This big migration boom that caused a bunch of these markets to swell up faster than they should. Unfortunately, they keep pointing to Austin, right? There's a ton of pain coming in Austin, according to a lot of folks, just because it was such a hot spot for people to land. That's going to slow down. That's their prediction, which is, of course, it will. Rising disaster insurance costs will make extremely climate risky homes even more expensive. There's crazy fire insurance cost in some of these places in California, other disaster insurance costs. So it's talking about beachfront in Florida and the hills of California, where the home might be a little bit less, but if you pay $5,000, $6,000, $8,000, $10,000 a year in insurance, it makes those homes even more expensive. Prediction 11, more cities following what Minneapolis did, which eliminated single family zoning and just said, if you're going to build, you're going to build multi-units because we need more units. And interestingly enough, they actually have seen the first metro area to see rents decline because of this, right? Rents and housing prices, to a certain extent, are a function of supply and demand. You build more rental units, more rentals come to market, the price comes down. If we could build more affordable housing for people to buy, prices would stabilize and come down. So Minneapolis has been kind of the test case for that. And we'll see if other places follow with incentivizing. You don't necessarily have to eliminate single family zoning, but maybe you incentivize zoning that creates more multifamily affordable units for purchase and for rent, to be honest. Prediction number 12 is a funky one, like buyer agent commissions will rise as fewer agents broker fewer deals at lower prices. I don't know if that's necessarily the case, right? Maybe. But nonetheless, those are Redfin's predictions. I'd love to hear in the comments from you what you see, if there's something they missed, if there's a piece of this you think they're off, anything you'd like to add to the conversation. I'd love to hear it. Interesting stuff to watch. It's definitely going to be an interesting year in 2023. I'll continue to make videos. I'll continue to listen to the boots on the ground, the real estate agents that are talking to clients, me and my team's conversation with clients every single day, because it's an interesting housing market. It's one with immense amount of opportunities. So I'm excited about it. Q4 of 2022 has been a fun one to be on the buy side, been working with, owner occupant buyers and with investors alike. Deals are happening. We're structuring some really cool mortgages because we're able to get credit from the sellers. So stay tuned. I've got more videos on all things mortgage and real estate. Check out more videos here, and here, and over there.